Assalamu alaikum wa rahmatullahi wa barakatuh. Very good morning, ladies and gentlemen, excellencies. Thank you to the organizers for kindly inviting me to be part of this very significant conference. I've been asked to talk about the way regulators look at regulatory development in light of fintech going forward. Can I have the slides up, please? Okay, this is interesting. Maybe I'll just say a few opening remarks about the advent of fintech. Reality number one is that financial services remain the most heavily regulated industry in the world, in most jurisdictions, without exception. And then comes along the promise of fintech, which promises a few things. It promises the delivery of financial services in a more efficient manner. It promises more customer centricity. It promises to disrupt financial services. It promises to address issues such as financial inclusion, which is a real issue in the region that I live in Southeast Asia, where only 27% of people have got access to bank accounts. And when you juxtapose, heavily regulated industry against the incoming of disruptive forces, you will find that regulators are constantly thinking and worrying about how they deal with this advent of fintech, because in as much as a small fintech player presents smaller risk compared to an incumbent bank from a systemic risk perspective, there are additional risks that it brings in, whether it's cybersecurity risks, as my colleague from Malaysia has raised, or the issue of risks of access to data privacy, as His Excellency Dr. Sri Anwar Ibrahim has mentioned earlier on. And so how do you therefore deal with this conundrum? So I will just briefly touch upon four broad areas in the course of my short presentation. First, to explain the philosophy of the regulators in Singapore when it comes to dealing with fintech. Two, how the Monetary Authority of Singapore manages the twin forces of regulation and fostering innovation. Three, some highlight of certain regulatory developments in the fintech space. And four, the regulatory sandbox. Now, this is the MAS temple, which sets out the thinking or the regulatory philosophy of the regulator. I think it's not dissimilar to what other regulators do. So at the top of the temple, the roof, it talks about promoting a sound and progressive financial services sector. However, as you go along to what the MES does, some of the principles are quite significant, and two stated principles are that, one, regulations have to be risk-focused, and that's quite important when you look at the advent of fintech. And two, you have to be business-friendly. So I think, sorry about the formatting. Business-friendly is a stated objective of regulations, that regulations must facilitate business. So that's one. Two, along the way, the MES issued further guidance in the form of tenets of effective financial regulation. And it highlights certain objectives like being one being outcome focused, two being risk appropriate, and three responsive to changes in cycles. Well, I was formerly from the Monetary Authority of Singapore, and I used to head a policy division that wrote rules for the capital markets. And I can tell you, it is very nervous for a regulator to try and anticipate what future technological advancement can bring to your market. And so in the context of fintech, Singapore has got an annual fintech festival. Last year, 40,000 people from all over the world came, and we were very happy to host everyone. And this is Ravi Menon, the managing director of MES, and he was talking about how regulators confront regulation and innovation. And he said this, that it is not possible for regulation to front-run innovation. You cannot foresee any technological advancements. It doesn't work that way. You must wait necessarily for innovation to happen and then decide what you want to do. He says that regulation must run alongside innovation, but I think the reality is there's always a lag between innovation and regulation. And he mentions a few things. He mentions that as the regulators look at a new fintech offering, right? And in the past few years, we have seen offerings such as peer-to-peer lending, equities crowdfunding, robo-advisory. We have seen blockchain coming in a very big way. There's so many applications with blockchain, including in Wakaf. I think we have a friend in the audience who does that. We have seen cryptocurrencies coming along, initial coin offers, securities tokens, and now people are talking about things like stable coins and fiat-based cryptocurrencies. So these are all wonderfully new things that can bring a lot of value to humanity and the community. But when you are confronted with a new fintech development, I think the instinct is for you to say no. But I think what was heartening was that the position taken by Singapore is that the regulator will look at the materiality of the impact of the new development, whether it brings across material risks to my financial sector, and to identify that risk. And also in crafting a response, you have to take a very proportionate approach, because you cannot kill an ant with a sledgehammer. It's not going to work that way. So he did end off his presentation by saying that with fintech, he wants to let a lot of flowers bloom, let 1,000 flowers bloom. But the caveat is that it has to be a beautiful garden at the end of it. And I think that sums up the tension that regulators have to think about. This is Tharman Shanmugaratnam. He is Deputy Prime Minister of Singapore. He is also Chairman of the Monetary Authority of Singapore. I'm highlighting this slide because I think it illustrates how regulators deal with the tensions. And this is his response when it comes to regulating cryptocurrencies. Now, this was in Parliament. A member of Parliament asked whether Singapore should ban cryptocurrencies because China and South Korea has banned it, and there are consumer protection issues. So what are you going to do about it? So his response was very nuanced. He starts off by saying that cryptos are an experiment, that the risks are too early to identify. The long-term implications are still not known yet. And then he goes on to say that as now, there's no reason to ban cryptos because there's no materiality. It hasn't really impacted the rest of the financial services sector as much as conventional fiat currency has. And then he goes on to say that he warns investors you could lose your shirt if you invest in cryptos because they are high risk. But the last paragraph is very enlightening because he acknowledges the value that cryptocurrencies can bring. They can be socially or economically very useful to Singapore. And so it's a very carefully nuanced approach, right? So, and along the way, the Singapore regulator also issued further guidance on initial coin offerings. Now, unfortunately, this is an area that might have been tainted by a few bad apples. However, if you think about this, in an ICO, and I'm simplifying, what you're really doing is pre-selling your services. So if I run a coffee shop, I could issue a coffee card, or I could issue in the form of a token. And the value of the token is that I can sell it to someone else, and that someone else can go to an exchange and liquidate it. So there's liquidity if he wants to sell it off. So the position that the MES took was, they gave guidance, this was in August 2017, that the key test is whether the tokens are securities. If they are securities, they are of course regulated under the current Securities and Futures Act. But if they're not securities, they are largely unregulated. But there are still expectations for issuers to get a legal opinion that the tokens are not securities and to look at AML and CFT risks, which is a risk when you sell anything on the internet. So it's a very carefully nuanced approach as well. Along the way, there are a few other regulatory developments. When it comes to crypto exchanges or crypto OTC trading, this will be regulated under new payments legislation. In Singapore, they have taken an approach to facilitate securities token offerings. So what are these? Again, in the old school world, you issue a security, it can be in the form of a paper security, or it can be digitized, as most exchanges do. But now we have seen the advent of securities on the blockchain. This could be equity, this could be debt, this could be a revenue sharing arrangement. Again, the blockchain is a technology of trust. So I can sell my securities on the blockchain, and a private investor, whereas in the past he is stuck with the private equity, now he can go to a recognized market operator or securities exchange and liquidate his investment. So it's great. It helps enterprises raise funds. It helps investors to invest and be assured of liquidity. So this is an interesting new development. And again, the regulatory framework for this is now being thought through and has been put in place in Singapore. So I'll move on. I think these are some of the drivers for crypto regulations. I think whether or not regulations, the shape and form will depend on issues such as the responsibility of issuers, whether proper disclosures are made in the white paper, things like conflicts of interest are being addressed, the level of complaints, incidents of frauds or scams, market abuse in crypto exchanges, which unfortunately still happens, but it also happens in conventional financial services, regulators understanding the mechanics of ICOs and self-regulatory mechanisms. In this regard, we are involved in two initiatives. One is the Global ICO Transparency Alliance that seeks to promote transparency for ICOs. We also started a crypto exchange association called Digital Exchange, DX, which seeks to promote best practices for exchanges worldwide. Okay, so just a couple of snippets of regulatory sound bites. This is the Chief FinTech Officer of the MES. He said this at a G20 meeting. He said, and this is quite interesting coming from a regulator, that he wants to quash this false narrative that's been going around for the past 2 years, that you can separate the blockchain from crypto. You can't. Of course, from a technology point of view, the blockchain is separate from the cryptocurrency. The underlying technology behind Bitcoin is the blockchain, and that's separate from the coin. But what he's saying is that the use of the coin or the token is very much intertwined from a business point of view, that you can't really divorce the two. Okay, that's one. Two, he also said that he thinks it's likely that the key regulators in the world might seek to plug the gap when it comes to cryptocurrency regulations or ICO, so this might happen. Just on the last part on sandbox, I think this is a debate that's been taking place in Qatar as well. I note some articles from the net that the regulatory sandbox is an area that you would like to look into in Qatar. It's actually, this is Ravi Menon again at the FinTech Festival. He said that when he introduced the sandbox 2 years ago, this was a compromise between enabling experiments, encouraging innovation on the one hand, and to preserve safety and soundness on the other. So I think a lot of jurisdictions have adopted this sandbox. The idea is you can experiment in the sandbox if you're a startup or even a conventional financial services institution. The idea is that we will limit the transaction size, transaction volume during the sandbox period. You test, you do your experiment. If something blows up, because it's a controlled environment, it doesn't blow up publicly, so that's the benefit. We will provide exemptions to you such that you don't have to say fully capitalize the company during the sandbox period, and some other exemptions as well. And the underlying concept is that the regulator is now taking risks. I'm allowing you to conduct a regulated activity even before you are licensed during the sandbox period. So there are some other considerations like, and this is an ongoing debate in Singapore as well. First, proactivity, that the regulators shouldn't just be regulating but giving advice. And the other question is whether you want to open the sandbox throughout the year, which is the case in Singapore, or seasonal. Like some jurisdictions, you only open it certain parts of the year. Class exemptions during the sandbox process. But what happens after the sandbox? Can the regulators still continue to give exemptions? Because if I'm still a new startup, I might be in the sandbox for 6 months. After that 6 months period, I think it makes sense to continue to exempt me from some of the requirements. Interestingly, the MES in November last year issued a further consultation paper proposing a sandbox express, meaning that for certain categories of activities like remittance, 1, 2 for recognized market operators, which are securities token exchanges, or 3 for certain insurance platforms, what the MES will do is that they will put them to a fast track, meaning that if you submit an application today, within 21 days, you can start doing your activity in the sandbox. And that's really great for the industry. So it's interesting times for regulators worldwide. And because of time constraints, I will end my presentation here. So thank you very much.